Welcome back to Equity Mates. We're about to answer a question around micro-investing and whether it is worth it. But before we do, I just want to give a quick shout out to everyone who has contributed to our growing list of companies with the best moats. This was something we launched last week on the podcast, and we are trying to compile a comprehensive list of the companies with those powerful, sustainable competitive advantages that will allow them to be great investments for years to come. To give you a sense of what's coming through, Bryce, I want to share a couple with you. It's been amazing the number of people that are talking about big tech. Mm-hmm. So Facebook with its network effect.
Okay, yeah.
Pretty hard to disrupt.
Yeah.
Another one that people have been sharing is Apple.
Okay.
The network effect of being on the iMessage system and being able to be part of the group chats.
Yes.
You can't, tough to get out and go to Android and fall out of all your group chats.
Yes.
So that's an interesting moat there. One that I thought was quite interesting was some of these waste companies. So access to landfills can be a captured resource. Mm-hmm. So Cleanaway down in Melbourne was one that was pointed to as an example. They have like the biggest landfill. It might even be the biggest landfill in the Southern Hemisphere. And they're not building a lot more landfills. And so Cleanaway have this captured resource that allows them to basically dominate that market, and all their competitors have to go to them.
Tough to elbow in on.
Yeah. And so I thought that was an interesting moat that I hadn't really thought about.
Nice.
So if you've got any ideas of companies with really powerful moats, equitymates.com/contact. We are trying to build the most comprehensive list, which we'll then share. So
love it.
Get on it.
Get on it. Let's build that list. All right. Well, we had a live event in Melbourne, and part of it was Ask an Advisor. We had way too many questions to get through on the night, so we're going to try and get through some on the show. And this one came from a community member on the night. Is micro investing worth it with the current high interest rate?
Yes. Next question.
Done.
No, look, it is a good question, because investing really, at its core, is about taking more risk for the opportunity to get more reward. And you can essentially chart every investment out on a risk curve where on one axis it's potential gains or reward, and on the other axis it's risk. And you should only be willing to take more risk with your investments if there is the opportunity to get more as a result.
Yeah.
4 or 5 years ago, when interest rates were next to nothing and we weren't getting anything from our savings, micro investing with its long-term average expected return of around 8% made heaps of sense when you compared it to 1% in your savings account. But times have changed, interest rates have risen, and now we're comparing 5.5% in our high interest savings account to an expected investment return over the long term of 8%. But that 8% isn't guaranteed, and it's certainly volatile.
Yeah.
So that differential, is micro investing worth it?
Worth the extra 3%.
Yeah.
I mean, on a mathematical equation, yes, if you're in it for the long term. But look, I think that this is if you're starting your investing journey, if you're looking to build wealth over the long term, that's just, for me, that's not the way to look at it. I think the habits that you get into far outweigh the trying to make that risk reward decision. And for me, micro investing is all about dipping your toe in the water, getting into the habit of investing small amounts, letting them grow, understanding what your investments are going into, how you might see, well-diversified multi-asset portfolios, and then understanding who you are as an investor. So I think all of those things, if you're micro investing, I don't think you need to be worrying about what is the interest rate doing and should I be better off putting it into, and is it worth just putting my money into a savings account?
Yeah, I think the other thing is the difference doesn't feel like a lot now, but we're not talking about the difference in a couple of years. We're talking about the start of almost a lifelong journey of building wealth. And so I've just run some numbers on the Money Smart compound interest calculator. $20 a week invested for 40 years at 5% gets you about $130,000. If you just up that percentage to 8%, it gets you over 300 grand.
Well, there you go.
And so it's just like those small differences that is at its core the power of compounding. Small differences in your annual return consistently grow and grow over time, and that gap gets bigger and bigger. And so I think to the question of is micro investing worth it? It is, because even those small differences are the start of a much bigger wealth building journey, on top of everything you said about learning about how the stock market works and, you know, growing that investment over time and building those good habits. I guess my final point would be they're not mutually exclusive. You know, whereas maybe a few years ago you would have been putting more of what you were saving from your salary into the micro investing app.
Definitely.
You can now spread it, and you can, you know, earn some from your high interest savings account, and you can earn some from micro investing. But I think it would be a real shame if you didn't try and get started, because who knows where interest rates are going.
Yeah.
But as we started this episode with, and as we keep coming back to on this investing content journey that we're on, like the stock market has just been a proven, consistent performer over time.
Greatest wealth creating machine in history, one could argue.
One could argue.
Equity minds.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.